Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello and welcome to our conversation about the SRA accounts rules, particularly looking at the results from the 2023 accounting period. My name is Matt Melksham. I'm a partner at Westcotts Chartered Accountants, and I'll be hosting this session. I'm joined by a number of friends and colleagues from accounting firms around the country. We're all part of members of the PrimeGlobal group. Just a reminder that the PrimeGlobal group is one of the largest associations of accountants in the world, with 300 members. PrimeGlobal combines the expertise and resources of a global association where we all come together and benefit from the group expertise in accounting, auditing, tax, and associated services. It's a group that we all benefit from being a part of, sharing ideas, insights. Hopefully you'll learn something from our conversation. So rather than introducing everybody, I will pass over to each person in turn to introduce themselves and their expertise. I'll hand over to Claire.
Thanks, Matt. Hello, everyone. My name's Claire Watkins. I'm a partner in Buzzacott Chartered Accountants. We're a London-based firm of approximately 650 people, and my role in the firm is to head up the professional practices group, which means I work primarily with law firms, ranging in size from startups to long-established firms on the accounting, tax and regulatory side of things, but also on a lot of advisory work, such as restructuring, expanding the partner tier, mergers and acquisitions and that sort of thing, and indeed internal issues to do with succession planning and that sort of thing.
Thank you, Claire. Alice?
Thank you. Morning, everybody, or hello, should I say, depending on what time you're listening to this. I'm a manager at Larking Gowen, and I look after our legal sector, where I assist a variety of law firms across Norfolk, Suffolk, and North Essex. We deal with all sorts of the compliance side of things, so the accounts and the tax, but not only that, we like to offer further strategic advice and planning, whatever that might look like for the particular client, and helping them with the challenges that they may be facing. In addition to that, we have extensive knowledge of the SRA accounts rules and help on keeping all of our clients with their compliance. Larking Gowen has 6 offices across the region, and we have a full service offering, whether that be audit, accounts, tax, and extend into corporate finance and insolvency as well. So do get in touch if we can help you.
Thank you. Veronique?
Hello, I'm Veronique, partner and head of professional services at Westcotts. Westcotts is a firm of accountants and advisors in the southwest of England, serving predominantly Devon and Somerset. We have about 16 offices, serving individuals and businesses in the area for over 30 years. I particularly enjoy working with the legal sector, again with Alice and Claire, looking at strategy, helping clients along the way with any challenges that come up, and just enjoying collaborating and helping businesses and practices grow whichever way they want to go.
Thank you, Veronique. Now, the 2023 SRA period is finally over, which we're all grateful for. It finished a while ago. So, first of all, we're just going to talk about a few of the reviews that we've seen and our trends that we may have seen in the last SRA season. And we'll start with Claire. Anything you've seen this season?
Yes, I think one of the trends I've seen is a move towards greater automation. And I think probably it really was kickstarted by the pandemic because, of course, everybody was forced to use less paper and find ways to do the work using more automated means. So I have noticed that a lot of firms now are, at least on the accounting side of things, they're pretty well paper free. There are no pink slips anymore and signing things in pen. It's much more email authorization and automated processes. So that makes things much quicker. So yeah, that's something I've noticed across the board actually, and obviously the bigger firms are able to do it more easily, but the smaller firms are in a way more agile, so they're coming on board as well.
I would agree with that as well, Claire. Lots of our firms are embracing the technology more, looking at sort of time saving methods that can help them focus on other things. There are still the usual technical breaches that we see. However, we have noticed that they've reduced in the last few years, perhaps with everybody getting used to the hybrid way of working, or perhaps getting more people back into the office. Residual balances is something that we find a lot of our clients still struggle with, though. So that's something that we're working with our clients to try and get on top of.
Absolutely, I concur with that. And in terms of clerical errors, they've significantly reduced coming out of the COVID years. And at one point, the bank reconciliations we found simply just weren't being signed off or physically stamped at the right time. And actually, it goes along the lines of the fact that we often have coffers who don't have a finance role, needing to act in a finance role manner in these ways, and it's their duty to do that. And whether we need to offer any extra training in that area to help them. Because often we'll find some old reconciling items on the bank reconciliations, or perhaps things that have been there which they don't fully understand and just need a hand with. Was just explaining about how we can help them there.
So there's been a number of changes in the rules since 2019. What changes have you guys seen, the firm's been making since those changes? Ellis, can we start with you?
Yeah, sure. I think it's safe to say the pace of any changes that our clients made was very slow, probably not helped by the fact that the change came in and shortly after we were then, launched into a pandemic. But certainly, I think, as we touched on in the last question, firms are now looking to modernise, embrace the technology. So I think that is then extending to looking at their policies and how they can make changes to make their lives easier. So I think we could even see less clerical errors going forward if firms simply make a change to some of their policies to extend what prompt means for them and their clients.
Claire, Veronique, any further thoughts on the rule changes of 2019?
I think it's just going along the lines of exactly what Ellis has said there, in terms of allowing firms to define what they mean by paid promptly, and gradually we're seeing more law firms define their policies. And the key thing here is just documenting it and then making sure that they're following their own procedures as part of that.
Definitely, because that's essentially what we're testing them against now, isn't it? So
I think they're starting to use the rules to their advantage now in a way that the rules were set out to do. So as we've said, the fix a problem promptly rule was quite restrictive, and now they're able to accommodate the fact that they might have a finance manager that doesn't work 5 days a week. So actually, if they can't fix something on a Friday because that finance manager isn't in until the following Monday, that's okay, as long as they've got it in their policies and procedures that's what they're going to do. So I think the more we see about flexibility of the rules, as long as the underlying rule is that you look after client money properly, I think it'll make things easier for law firms.
So what further changes could firms be doing to make their lives easier? From your experience between the three of you, you've seen a lot of cases. What could firms do to make their jobs easier?
So I think generally with interest rates rising, that's what we've seen has been a hot topic really, and just making sure that their interest policy is fair, and then making sure that their terms of engagement document that in terms of how they charge interest. And really there are useful tools out there within their software or even banking facilities that enable you to calculate that interest and assign it properly.
I think looking at the de minimis limit on interest is one that we've all seen, and I think firms are starting to consider whether the de minimis limit, which has typically been at £50, at £20, could increase to £50 or even higher than that. So a lot of my clients have now increased it to £50. So below that level, they won't account for interest to clients, or they won't pay interest to clients. That obviously has to be in the letter of engagement to make it clear. But some firms that I have are pushing it up to as much as £100. So as long as it's made clear to the client, I think that's acceptable, and more firms are considering looking at it.
Yeah, agreed. With the level of client interest that interest being received on the client account, even at the moment, being a lot higher than in previous years, it is definitely a hot topic. Something that we've also considered for a number of our clients in relation to the interest point is partial exemption for VAT, and I would recommend that that is reviewed as well, just to make sure that you're not caught under these rules. In most cases, I would expect that law firms don't have a problem, but just making sure that it has been looked at would probably be a good starting point if you're looking at your interest policy as well.
It's a very good point, Ellis, because I don't think people really know the rules that well. So it is a very good point. And yes, do get in touch with any one of us if you've got queries on that.
So we all like a horror story. So it'd be great to hear from your experience of the season of 2023, anything that people can learn from, things to look out for that we can pass on to our clients as good advice. Claire, have you got any horror stories from 2023?
Well, there are a few, yes. We do get involved in being asked to be sort of expert witness, or if a firm that might not have used us as their reporting accountants, but they have got themselves into difficulty in the SRA, they're having to defend themselves to the SRA, they sometimes get us involved to write a report to support what they're doing to try to prevent whatever happened from happening again. So we do get involved in some of those during the year. And although, one or two of them were originated by some kind of fraud, I'm sad to say, most of them are just that there's a little bit of complacency that might have crept in. So somebody might have been looking after a client for a very long time and just isn't as vigilant as they should have been about what they're still doing for that client. I always refer to it as scope creep, which we have in our own business as well. You want to be helpful to your client, and when the client starts to drift away from the engagement that was actually agreed, you start to do extra work for them, and maybe it wasn't part of the original scope. Now, for law firms, that can get them into difficulty. So I think it's just worth making sure that everybody and partners can cross-check each other on this. Everybody is still doing the work that was agreed with the client and not doing additional work. Because what it can lead to is the not acting as a bank rule. That's the one that we're seeing most often. And I think we know that the SRA are very hot on that one as well. So yes, we've seen a few cases of that, but I mean, nothing catastrophic.
I think that's a really good point, Claire, is that actually just for challenging ourselves and each other within our own practices, as even if you're a legal firm or accountancy firm, it's right to challenge and ask questions. I haven't seen any horror stories from 2023, I'm glad to say, but 2022 and before there were a few, mostly where actually a bespoke system had been used for recording client money that wasn't particularly compliant, or the system wasn't robust enough. So actually, just a reminder that there are a wealth of systems and out there that if you need any help with identifying the right one for you, then we can definitely help you with that here. And it's just the importance of good record keeping as well. So again, if you're in a law firm and if you were trying to do your day job of serving your clients on legal matters, you might not necessarily be best placed to look after the finances and client money as well. So making sure that your team's set up in a way that you've got good segregation of duties and that you do have a finance function, either if that's internal or outsourced, that you can rely on to look after that side of the business for you. Because we're all good at the day job, but I know I'm not, as an accountant, I'm not a good legal advisor or solicitor. So it's just sticking to what we're good at.
Yeah, agreed. And I guess it's having that opportunity or giving yourself the time to make sure you do the review step, so you don't fall foul of the scope creep or not documenting things and just rushing ahead and with do all the time. Luckily, we haven't seen any horror stories either. A few issues similar to what you've described, Veronique, with software and not using compatible software for the client account record keeping. And I think there's a lot of work that potentially we could do with our clients around that. We're often seeing software firms, increasing their prices out of nowhere, which is perhaps making clients and law firms look at what they're using. They want to make sure that they're, using a product that they can get the most out of and that is efficient and modern. And a lot of the time, these client account softwares are falling behind and is not as modern as perhaps Xero or QuickBooks, and people are wanting to entwine the two together. So I think there is definitely going to be some changes coming in relation to the software coming through in the next couple of years.
I think that's right, and the four of us have been talking about it in the past few weeks, haven't we, that we're noticing a trend where firms are actually having two lots of software if they're not big enough to have some kind of bespoke system that covers everything, but they have one off-the-shelf software like a Xero or a QuickBooks that does the financial side of things, and then another piece of software that just does the client accounting stuff. Because, as Ellis says, some of the client accounting software is falling a little bit behind and isn't as modern as it perhaps should be. So I think we're seeing the same thing.
And then I guess it's just reviewing the integration of those, isn't it, and making sure that they work well together. And perhaps that's a bit of half of the battle probably at the moment.
So it sounds like it's been a busy 2023 period. Is there any other kind of final thoughts, other insights that you'd like to leave people with?
Well, I would just say that I think it's important to keep training up to date. I mean, it's important for all of us to keep training up to date. But I think during the pandemic, when we couldn't get to see clients so easily, we didn't do so much of the at the client offices training that we did in previous years, and we're starting to do a bit more of that now. So I think it's useful to have somebody come in and actually remind everybody of the rules, how they work, what you can do within the parameters of the rules from top to bottom. And I include partners in that as well. It's not just, the more junior staff or the legal cashiers. It's right the way up to partner level. I think it's useful to have regular training.
Absolutely, I agree with that. I think training is key, isn't it? And just making sure that we're all up to date. And that's something that we can easily offer as accountancy firms, and be absolutely happy to help with. The only thing that we know that is quite a headache to a lot of legal firms is operating a client's own account. And we are aware that at the moment there is a proposal to change Rule 10. It's just to stress that it's a proposal at this stage, which may well help in terms of looking at moving the bank reconciliation period to up to a 16-week period, keeping a central register and making sure that those records are up to date. So it's just watching out and seeing what's to come.
Yeah, I think that would be welcomed by a lot of law firms who deal with those, because it can be a heavy admin burden. But yeah, agree on your points through training and just reminding the earners and COFAs of their responsibilities. And I think you mentioned earlier, Veronique, about you wouldn't make a good legal advisor, and I guess we appreciate that they're not necessarily financially minded. So even just going in and explaining what a bank reconciliation is and the red flags are, if you like, to look out for, people might find useful. Or even going in with a set of accounts and explaining this is a balance sheet and profit and loss account, because I think that's a lot of things we take for granted because it's our day in, day out, but perhaps that might be useful as part of that training.
Absolutely spot on, Ellis. I was just thinking back to an SRA investigation, well, not an investigation, an SRA visit, if you like, just a rudimentary visit that they made to a client of ours. And they said to the COFA, who was a partner, not a member of the finance team, the inspector said to the COFA, "Can you just talk me through this bank rec?" And I heard from others that the partner just went white as a sheet because they didn't really know how to talk anybody through it. And of course, they're responsible for reviewing the bank recs. And, why should they know? I know that they're not, we're the accountants and they do a different day job. So it's quite understandable. But I think that's where we come in and we could train anybody who needs to know what to look out for in a bank rec. And as Ellis said, more widely. So, we'd love to be involved if that would be of help.
That's a good place to wrap up. Thank you for your useful insights, everybody. I'm sure everyone will have taken something away from this session. Thank you for joining us. If you have any questions on any of these matters discussed or any specific questions for our guests, please feel free to contact them directly. I will just pass over to the individuals to let everyone know where they can find them. Claire.
Thanks, Matt. Yes, so just look at the Buzzacott website under professional practices. My name's Claire Watkins and you'll find all my details there.
Yeah, likewise, head to the Larking Gowen website and you'll find my details there, along with John Atkins, who's the partner that heads up this sector. Alternatively, I'm on LinkedIn, so drop me a message on there.
Yeah, and me too. I'm on the Westcotts webpage, so find me there. We've got an insights page where you'll find other blogs, podcasts and other content. And I'm also on LinkedIn, so it's been a pleasure.
Thank you for hosting, Matt.
Thank you very much, and thank you everyone for watching or listening. And we hope for no more horror stories for 2024.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.